Most traders don't want to hear this, but I'll say it anyway. Most of the trading advice you follow is actually wrong. Not just outdated, not just incomplete, wrong in a way that quietly sabotages your progress while convincing you that you're doing the right things. I remember once meeting a trader who had watched over 400 hours of trading tutorials. He had notebooks full of strategy breakdowns, pattern drawings, Fibonacci levels, psychological models, and risk management formulas. He had done everything the gurus told him to do. And yet, he was still losing money. Why? Because the most popular advice out there isn't designed to make you successful. It's designed to make you feel productive. And what feels productive is often the opposite of what actually works. Let me ask you something. Have you ever wondered why, after all the videos, all the books, all the tips and tricks, your results don't match your effort? Have you ever felt like you're doing everything right, but the market keeps proving you wrong? And have you ever caught yourself thinking, maybe I'm the problem, even though deep down you suspect you're following a blueprint that was broken from the beginning? Let's be real, trading is frustrating. You try to follow the rules, but the market seems to punish you anyway. You try to be patient, but the longer you wait, the more anxious you become. You try to stick to a plan, but the moment your stop hits or your trade goes against you, your emotions start driving the car. You might be overanalyzing charts to the point of confusion. Or maybe you jump into trades too early because you're afraid of missing out. Or you hold losing trades too long because you can't accept that you were wrong. These aren't flaws in your character. They're symptoms of following advice that doesn't match the reality of how markets move or how human psychology works. And if you're being honest with yourself, have you ever sat in front of your screen and thought, why can't I just get this right? Why does it feel like everyone else understands something I don't? You're not alone. Every trader, at some point, has asked those same questions. The real issue is that conventional trading advice teaches you to act like a machine in a game that punishes machines. You're told to be perfectly disciplined, perfectly emotionless, perfectly systematic, perfectly consistent, and perfectly rational, all while dealing with a market that is none of those things. So you end up trying to follow rigid formulas in a fluid environment. It's like learning to swim from a book and then being thrown into the ocean. Most traders are taught to look for perfect chart patterns, but the market rarely gives perfect patterns. They're taught to predict the future, but the market doesn't reward prediction. It rewards adaptation. They're taught to mimic some guru's strategy, even though that guru trades with different capital, different emotional thresholds, different time availability, and a completely different temperament. Imagine someone telling a sprinter to adopt a marathon runner's training program, or telling a sculptor to paint like Picasso, or telling a chess player to memorize every possible game instead of learning how to think. It sounds ridiculous, but traders do this every day. And when they fail, they blame themselves instead of the flawed advice they were given. Let me take you into a story, one that changed how I viewed trading forever. I once watched a wildlife documentary about a snow leopard hunting on a mountain ridge. The narrator explained that the leopard spends a massive amount of time observing, waiting, and studying the terrain. It doesn't chase every movement. It doesn't pounce at the first sight of potential prey. Instead, it waits silently until the environment lines up perfectly, until the wind direction hides its scent, until the prey steps into a vulnerable angle, until the snow beneath its feet settles enough to mask the sound. And here's the fascinating part. The leopard only attacks when the probability of success is maximized. It's patient to the point of appearing lazy. But once it commits fully. As I watched, I realized something profound. Most traders behave like the opposite of a snow leopard. They chase everything. They attack too early. They leap without alignment. They let hunger drive them instead of strategy. They treat the market like something they must constantly engage with, rather than something they must patiently stalk. And if you ask yourself honestly, how many times have you jumped into trades simply because you were bored? How many times have you convinced yourself that something is better than nothing, even though deep down you knew the setup wasn't right? That snow leopard waits hours to take a single shot. Some traders can't even wait 30 seconds. Now let's break down a few core principles that reveal why so much common advice is wrong. The first principle is that trading isn't about being right, it's about positioning. Most advice focuses on predicting direction, but professional traders focus on positioning themselves in moments where the reward outweighs the risk, even if the probability isn't perfect. For example, beginners think the goal is to catch the perfect breakout. They look for confirmations, retests, indicators all lining up. But by the time all that happens, the move is half over. A professional sees a certain type of volume shift or price compression and gets in early, knowing the odds favor a breakout, even if it's not guaranteed. The difference isn't information, it's mindset. Another principle is that trading isn't about activity, it's about selectivity. The average losing trader takes too many trades. They think being active equals being skilled. But if you look at the trade logs of profitable traders, you'll see they skip more trades than they take. They miss moves. They let the market run without them. They choose silence over chaos. And whenever you hear advice that encourages constant scanning, constant action, constant engagement, that advice is rooted in the mindset of someone who doesn't understand how outcomes are distributed in markets. One powerful exercise you can try is this. Go a full trading day intentionally not taking any trades unless the setup is so perfect it feels almost too good to be true. You'll be shocked by how clear your mind feels when your default state is observation instead of participation. Another principle is that emotions don't disappear with discipline, they disappear with structure. Many gurus tell traders to control their emotions, as if the mind is some obedient pet. But real emotional control comes from structuring your environment so that your emotions matter less. If you size your trades too big, no mindset trick will calm your nerves. If your stop loss is too tight, no meditation technique will save you. If your plan is vague, your fear will fill the gaps. That's why calm traders seem superhuman. They're not. They've simply removed the conditions that trigger emotional volatility. Now let's step back and explore a counterintuitive insight. Good trading often feels boring. It feels uneventful. It feels like nothing is happening. But most popular advice encourages traders to stay active, stay engaged, stay in the market, as if stillness is a flaw. The paradox is that the traders who make the most money are often the ones who spend the least time trading. They wait. They watch. They enter selectively and exit decisively. They aren't addicted to motion. Another paradox is that losing correctly is more valuable than winning incorrectly. Beginners celebrate random wins, thinking it means they're finally getting it. But professionals celebrate disciplined losses because they know that following the process, even when it hurts, is what compounds over time. Imagine an athlete who only celebrates when they score, not when they train, or a monk who only meditates on peaceful days. That's how most traders treat their losses, as failures instead of necessary steps toward mastery. To strengthen your discipline, here are a few practical exercises. One is the 1-minute hesitation rule. Before entering any trade, wait 1 full minute. If the trade still makes sense after that pause, you enter. This trains emotional delay and prevents impulsive entries. Another is the verbalization technique. Say out loud why you're entering a trade. If you can't explain it clearly, you shouldn't take it. Another is the 3-chart blackout. Hide the lower time frames and only trade off higher ones for a week. This trains patience and eliminates noise. You can even do a reflection exercise every night where you ask yourself, did I trade like a hunter today or like prey? This question alone can change your entire approach. Let's return to the animal metaphor for a moment. Picture a cougar perched on a high rock overlooking a valley. Its breathing is slow. Its eyes are still. Its body barely moves. It studies the herd below. It notices which animal is limping slightly. It watches wind direction, light, terrain shifts. It adjusts silently. And when the moment comes, it attacks with fluid certainty. It doesn't second-guess. It doesn't hesitate. It doesn't doubt itself mid-leap. It has earned the right to act quickly because it has spent hours preparing slowly. That is the trader you must become. And think about the opposite. The frantic trader switching between charts, indicators flashing everywhere, jumping in and out of trades, reacting to every candle. If the cougar hunted like that, it would starve. How many traders are starving not because they lack skill, but because they lack stillness? How many times have you lost simply because you attacked too early, too often, or without alignment? Now, as we move toward the end of this journey, I want you to imagine yourself differently. Not as a struggling trader chasing the market, but as someone who understands the deeper rhythm beneath the charts. Picture yourself months from now, sitting in front of your charts with calm confidence. Picture yourself taking fewer trades but better trades. Picture yourself watching a setup you used to jump into. And this time, you just smile and wait because you know it isn't ready. Picture yourself losing gracefully, winning strategically, and building consistency one decision at a time. Let me tell you a quick story. I once coached a trader who was losing for 3 straight years. He tried everything, hundreds of strategies, countless indicators, dozens of systems. One day I told him, "Your problem isn't that you don't know enough. Your problem is that you know too much useless advice." We stripped everything down to one simple setup and one simple routine. 3 months later, he sent me a message saying, "I've never traded this well in my life." It wasn't the knowledge that changed him. It was the removal of noise. Another trader I know replaced his entire strategy with one question. Do I understand why this trade should work? If the answer was no, he didn't take it. That alone transformed his results. So here's your mantra to take with you. Slow is smooth, smooth is clear, clear is profitable. That's how real traders think. Not with urgency, not with fear, not with noise, but with clarity that cuts through the chaos. You don't need more strategies. You don't need more indicators. You don't need more gurus. You need stillness, selectivity, and structure. The courage to do less but do it better. And the identity of a trader who chooses discipline over drama. If you want to rise above the noise, start with this. Question every piece of advice you hear, including mine. Test it, observe it, challenge it, and most importantly, build a trading identity rooted in patience, clarity, and intentional action. Because once you stop following the wrong advice, you finally make space for the right results.